We shall now commence this module by studying the non-resident Indian. A person is non-resident in India if he does satisfy any of the following two conditions. First, he stays in India for at least 182 days during the relevant previous year. Second, he stays in India for at least 60 days during relevant previous year, and he is in India for 365 days or more during 4 previous years immediately preceding the relevant previous year. There are two exceptions to the above rule. First, in case of an individual who is a citizen of India and who leaves India in any previous year for the purpose of employment outside India will be considered a resident in India only if he stays in India for at least 182 days during relevant previous year. So, if he does not satisfy this condition, he will become a non-resident Indian. Similarly, an individual who leaves India as a member of crew of an Indian ship, he has to satisfy 182 days condition in order to become resident in India. Second, an individual who is a person of Indian origin who, being outside India, comes on a visit to India in any previous year. He shall not a resident in India unless his stay in India is at least 182 days during the relevant previous year. This is clear from the above discussion that only in these two cases a person has to satisfy the basic condition of 182 days. In rest of the cases, an individual can satisfy any of the two basic conditions, and if the person is not able to satisfy the basic condition, he will be termed as non-resident in India. After starting this module, you will be able to know the meaning of non-resident Indian, know about his tax liability, know about deemed income, know about advanced ruling. Let us now discuss about the income taxable to a non-resident Indian. Indian income is taxable in India if the taxpayer is a resident or non-resident. However, foreign income is not taxable to a non-resident. Indian income will include following incomes which will be taxable to a non-resident in India. First, if income is received or deemed to be received in during previous year and at the same time it arises or deemed to arise in India during the previous year. Second, if income is received or deemed to be received in India during the previous year but it arises or deemed to arise outside India during the previous year. Third, if income is received outside India during the previous year but it arises or deemed to arise in India during the previous year. Any income which is not received or deemed to be received in India and which does not arise or deemed to arise in India shall be termed as foreign income and hence shall not be taxable to a non-resident in India. In other words, a non-resident is not subject to tax in India in respect of his foreign income. Moving on to the income taxable to a non-resident Indian. Certain incomes are deemed to accrue or arise in India under Section 9, even though they may actually arise outside India if the taxpayer has a business connection in India, and by virtue of business connection in India, income actually arises outside India. So, if income arises outside India because of business connection in India, will be deemed to accrue or arise in India. A business connection involves a relation between a business carried on by a non-resident which generates profit and some activity in India which contributes to the earning of these profits or gains. A business connection may arise between a non-resident and resident if both of them carry on business, and if non-resident earns income through such a connection, business connection may take several forms, like it may include carrying on a part of main business of the NRI through an agent. Next, Meaning of business connection as defined in the Act. It includes the profession connection. It includes a person acting on behalf of a non-resident and who performs any one or more of the following. First, he exercises in India an authority to conclude contracts on behalf of the non-resident, but it does not include the activity of only the purchase of goods or merchandise for the non-resident. Second, he has no such authority but habitually maintains in India a stock of goods or merchandise from which he regularly delivers goods or merchandise on behalf of the non-resident. Third, he habitually secures order in India mainly or wholly for the non-resident or non-residents under the same management. Where a business is carried on in India through a person referred in above three activities, only so much of income as is attributable to the operations carried out in India shall be deemed to accrue or arise in India. Business connection shall not include cases where the non-resident carries on business through a broker, general commission agent or any other agent of an independent status, provided that such person is acting in the ordinary course of his business. Where a broker, general commission agent or any other agent works partly or completely on behalf of a non-resident or non-residents under the same management, he shall not be deemed to be a broker, general commission agent or an agent of an independent status. The following categories of income are deemed to accrue or arise in India. A. Transfer of capital asset situated in India. Income through or from any property, assets or source of income in India is deemed to arise or accrue in India. For example, X Limited, a foreign company, owns a house in Delhi. It is given on rent to Y Limited, a foreign company. Both the companies are non-resident in India. Rent is payable in foreign currency outside India. As the property is situated in India, rent of the property shall be deemed to be earned in India. If the non-resident transfers any capital asset situated in India, then amount of capital gain shall be deemed to arise in India. B. Income under the head salaries. Salary paid for rendering services in India is regarded as deemed to arise in India. So, income chargeable to tax under the head salaries is deemed to accrue or arise in India if it is earned in India. Any salary payable for rest period or leave period which is preceded or succeeded by service in India will also be regarded as income earned in India. C. Salary payable abroad. Salary received Indian nationals from the government in respect of services rendered out of India is deemed to accrue or arise in India. As per section 10, subsection 7, any allowance or perquisite paid abroad is fully exempt from tax. D. Dividend paid by an Indian company. Any dividend paid by an Indian company outside India is deemed to accrue or arise in India. It is completely tax-free in the hands of recipients. E. Income by way of interest. Interest income of the following types is deemed to accrue or arise in India. First, interest payable by the central government or any state government is deemed to accrue or arise in India. Second, interest payable by a resident shall be deemed to accrue or arise in India in all cases except the interest payable by a resident in respect of any debt incurred for the purpose of a business or profession carried on by him outside India, or if the loan has been taken for the purpose of earning any income from any source outside India. It means if the debt or loan is used to earn income from any source in India, the interest payable is deemed to arise in India. Third, interest payable by a non-resident shall be deemed to accrue or arise in India if it is in respect of any debt incurred or money borrowed and used for the purpose of a business or profession carried on by him in India. If the borrowed money is used for earning income from any other source other than the business or profession carried on by him in India, will not be deemed to arise in India. F. Income by way of royalty. Royalty income of the following types will be deemed to accrue or arise in India. First, royalty payable by the central government or any state government. Second, royalty paid by a resident except when the payment is related to a business or profession carried on by him outside India or to any other source of his income outside India. Third, royalty paid by a non-resident if the payment is related to a business or profession carried on by him in India or any other source of his income in India. G. Income by way of fee for technical services. Fee for technical services of the following types will be deemed to accrue or arise in India. First, fee for technical services payable by the central government or any state government. Second, fee for technical services paid by a resident except when the payment is related to a business or profession carried on by him outside India or to any other source of his income outside India. Third, fee for technical services paid by a non-resident if the payment is relatable to a business or profession carried on by him in India or any other source of his income in India. Let us now understand the operations not taken as business connection. The following operations do not amount to business connection. A. If all business operations are not carried out in India, the income of the business deemed to arise in India shall be only such part of income as is reasonably attributable to the operations carried out in India. The apportionment of profits should be on rational basis rather than arbitrary. B. Purchase of goods for export. In the case of a non-resident, no income shall be deemed to arise in India to him from operations which are confined to the purchase of goods in India for the purpose of exports. C. Collection of news and views. No income shall be deemed to arise in case of non-resident engaged in the business of running a news agency or publishing newspaper, magazines or journals from activities confined to collection of news and views in India for transmission out of India. D. Shooting of cinematography films in India. No income shall be deemed to arise in India from the operations which are confined to the shooting of any cinematography film in India, if such non-resident is either an individual who is not a citizen of India. Non-resident may be a firm which does not have any partner who is a citizen of India or who is a resident of India, or a company which does not have any shareholder who is a citizen or resident of India. Moving further, let us now learn about the advance ruling. A scheme of advance ruling was introduced by incorporating 19th B in the Income Tax Act 1993 in respect of assessment of income tax liability in case of non-residents. The scheme enables the non-resident to obtain in advance a binding ruling from the authority for advance ruling on issue which will arise in determining their tax liability, so that time-consuming and expensive appeals can be avoided. Such issue may relate to transactions undertaken or proposed to be undertaken by the NRI applicant. The Authority for Advance Rulings Rules 1966 provide detailed procedure for obtaining advance rules. The scheme in the due course of time has been extended to A. Resident application for determining the tax liability of a NRI arising out of transactions entered into by a resident with such NRI. B. Determining or decision in respect of an issue relating to computation of total income which is pending before any income tax authority or appellate tribunal. The advance ruling shall be void if it subsequently found by the authority on a representation made to it by the commissioner or revenue to have been obtained by fraud or misrepresentation of facts. However, on receipt of such representation for rebuttal and reasonable opportunity shall be allowed to the applicant and the commissioner of being heard before passing order declaring the advance ruling to be void. Let us now discuss the procedure for advance ruling. A. An applicant desirous of obtaining an advance ruling under this chapter may take the following steps. A. An application for obtaining an advance ruling under section 245A subset first shall be made in quadruplicate. A. In form number 34C in respect of a non-resident applicant. B. In form number 34D in respect of a resident applicant seeking advance ruling in relation to a transaction undertaken or proposed to be undertaken by him with a NRI. C. In form number 34E in respect of a resident falling within such class or category of persons notified by the central government. Second, the application should state the questions on which the advance ruling is sought. Third, the applications should be accompanied by a fee of Rs 2500 in form of demand draft drawn in favor of authority for advance ruling. Fourth, the application, its verification, the annexure to the said application and the statements and documents accompanying it shall be signed by the person mentioned in the 44E under Income Tax Rules 1962, where the authorized representation by a power of attorney authorizes him to append this signature and an affidavit setting out the unavoidable reasons which entitles him to sign it. Fifth, the application shall be addressed to the secretary and can be submitted either in person or by registered post. If it is sent by registered post, it shall be deemed to have been made on the date when it is received by the authority in his office. Sixth, if the applicant is not hitherto assessed in India, he shall indicate the following in annexure first of the application. A. His head office in any other country. B. The place where his office and residence is located or is likely to be located in India. And C. The names and address of his representatives in India, if any, authorized to receive notices and papers and act on his behalf. Seventh, if the application is found to be defective, the secretary of the authority may send the application back to the applicant for removing the defect within such time as he may allow. Such application shall in that case be deemed to have been made on the date on which the application after rectification is submitted. Let us now recapitulate what we have learned so far. A person is non-resident in India if he does satisfy any of the following two conditions. First, he stays in India for at least 182 days during the relevant previous year. Second, he stays in India for at least 60 days during relevant previous year and he is in India for 365 days or more during 4 previous years immediately preceding the relevant previous year. Income tax is taxable in India if the taxpayer is a resident or non-resident. However, foreign income is not taxable to a non-resident. Certain incomes are deemed to accrue or arise in India under Section 9, even though they may actually arise outside India. If the taxpayer has a business connection in India and by virtue of business connection in India, income actually arises outside India. The scheme enables the non-resident to obtain in advance a binding ruling from the authority for advance ruling on issue which would arise in determining their tax liability so that time-consuming and expensive appeals can be avoided. Thank you.